Hey everybody, this is Jim at SP500chart.com. It's actually 5:30 on Saturday, June 15th. Got to do the video now because tomorrow is going to be spent with family activities for Father's Day. Before we get into this, I just want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts. Okay, let's do a real brief recap, and then we're going to take a look at the week and kind of try to get some kind of understanding about what might be going on here. The first thing is, again, I remind you that the S&P from the middle of April until the middle to later part of May, for about a solid month, was in this upward channel defined by these green lines. Then we broke that channel, back tested, came down in this wider channel for 1, 2, 3, 4, 5, 6, about not quite 3 weeks. Then broke out of that channel, descending channel, Friday, 1, 2, 3, 4, 5, yeah, Friday of last week. And then we started the last 5 days that make up this week. So it appears to me that we came up, then we came down, and now we have broken out of this downward channel. And I'll remind you again that when you break out of any channel, it is for one of two reasons. It is either to consolidate, to move higher, or it is to reverse. In the case of the break of this line right here, it set up this little reversal pattern that acted kind of like a head and shoulders, with a target of about 1596. That target was not exactly met, but it got down to 1598, where we had a number of reasons to expect a bounce, and we got it. That bounce ended up not only giving a short-term bounce, but also ended up taking us out over this blue descending channel. Now, let's look at what happened during this past week, because here's where some interesting things kind of shape up. The first thing is, here's where our little breakout was on Friday. We mentioned coming into this week that we are still expecting resistance in that 1648 to 1650 range. And the reason is that twice we came up to that level. Well, actually, we came up to that level for that neckline check right here. But it just looked to me like if we're forming maybe an inverted head and shoulders here, that this horizontal line here would likely be a spot where we would back up if we tagged it. And that was also very close to the neckline of our head and shoulders top. I momentarily got those two lines confused, and because they're about the same color, I'm going to make this one even a little darker. Hopefully alleviate some confusion in the future. So anyway, we ended up coming up to that level and then started to sell back down, got underneath that blue line just a bit, which was a little surprising on Tuesday, but rebounded, came back up to this yellow line, long-term support that should act now as some resistance, but I'm not really that keen on that line being extremely important because the S&P has moved up and down and through and back up, has moved around on this line a pretty good bit, so I'm not really that concerned about this this particular trend line. But about midweek, we identified what appeared to be a smaller red channel that is kind of separate and apart from this larger blue one. And this red channel right here formed another little downward move with really two solid touches on the bottom line. You might count this one here too, but I'm going to call it 2, and 1, 2, 3 touches on the top line. On Thursday, the S&P got up over that line by a technically significant margin of greater than 1%. And then Friday pretty much started to give up some of that after encountering some resistance at 1640. Now, my idea coming into this week was that we may be forming an inverted head and shoulders that would lead to a move to about 1700 or 1695, thereabouts. That really isn't quite looking like the case right now, but that doesn't mean that we are not going to head up there. It just means if we do, it will be through the benefits of something that really probably is not a head and shoulders pattern. So I'm going to add, forgive me for doing this, I'm going to add another trend line. But in order to make the chart a little easier to read, let's get rid of a couple. You know what I'm saying? Just to make the exercise a little bit easier to follow. And what I'm going to do is I'm going to go with this June 6th low, and then I'm going to go with this low right here that took place near the end of the day on Wednesday and early Thursday morning. And we're going to see if I hit that line about right. Yeah, there we go. So what I'm thinking is, let's make this green. And since there's nothing else green on the chart, let's make that green too. And what I'm wondering here is if we may end up with a pattern that's sort of like this top over here. It wasn't exactly a head and shoulders. It actually was more of sort of a quasi head and shoulders triangle. And I'm wondering if we may not be seeing the same thing here, where we're going to have a relatively flat line up here at approximately 1650, and then potentially a rising support line that if we get over 1650, then just like this pattern that we had back here in May, it doesn't really make a difference, because you still would measure this pattern from the same point here, and the breakout wherever it might occur, if it occurs, would still point us up to the mid to high 1690s. Just making that one small change. Now, the week actually ended up being fairly understandable, with the sole exception of these little excursions underneath this line that should have served as support. It really didn't do it exactly as one would expect, but each time we got under it, the S&P was able to claw back over it. So I'm going to do something here. I'm going to take this line and back it off to here, because it looks like this is not as meaningful as it might be. So we're going to back this line off here. And then a little tool you can do is you can extend the line. So we're going to extend that line, but with a very light color. So we still can keep a tab on this, but without it interfering too much with our visual comprehension of what's going on. So we are over this resistance line here. selling on Friday, but let me show you something. Looking at a 3-minute chart, it looks to me like we may have made a small bull flag on Friday that is already, or not by a technically significant margin, but already moved up over this top line. Now, there's an alternate explanation for this as well. So I'm going to put them both down here on the chart. One is we came up strongly, came back in a little descending wedge that then broke out, did a little back test, and this pattern will set up a move to get back up here to test this 1648, 1650-ish line. The alternative is that we really haven't broken out of this yet because it's not a wedge, and instead it is a parallel pattern that still could be acting as a bullish flag. The difference is this: if this is a wedge, we've already broken out. If this is a wedge, however, it will eventually get over this line. And the reason I say, you can look at this and say, but Jim, it is a wedge. You showed me it's a wedge. Yeah, but sometimes you get these little wedge-shaped patterns inside of a larger, more of a parallel-shaped boundary. And you don't really get the breakout until you get up over that parallel line. So it's good that we're over this, but I think this line right here would likely serve as a more reliable trigger point to signify that the markets do want to go higher to the 1648, 1650-ish area. Because as it stands right now, we could have just broken out, and now we're going to come back down and back test and get down to this apex level, potentially even back down to this green line here. So does that make sense? So for practical purposes, I think it's probably safer for us to go with this parallel pattern right here. So if I feel pretty comfortable making this call, if the S&P breaks this line, which is currently will be about 1630 at the open on Monday, then I think it will likely put on 25 to 28 points in the next day to 2 days to get back up to test this level. And if it does that, then we'll need to make a call to see what we may be dealing with in the way of a pattern that encompasses so far about 2 weeks of trading. We don't know how much further out this will go. If we come up here and then we come back down and then bounce around the low 1620s and then come back up, well, then this would definitely be serving the role as a triangle and not an inverted head and shoulders. Or you might even say that it would be a triple, well, you don't want to say bottom because it's not really, when you're in the 1600s, you don't really want to call that a bottom. But it could be something of a little triple dip, with each dip being a little less than the previous one, which again fits the definition of an ascending triangle. The question will be, does this serve to reverse us up to test 1700, or does this serve to send us back down? We won't know until one of these lines breaks. But so far for trading on Monday, let's look at this little pattern. If you get up over this line here, break up over 1630, then very good likelihood that the S&P is going to be good for about another 18 points or so to come back up to this resistance line right around 1650, or just a little bit underneath it. And if it were to take that out, then that would look to be setting up that move to just under 1700. And the final thing I want to say is we've been doing this long enough to where I don't want to say here's where you buy, here's where you sell, because everybody's tolerance is different, everybody's outlook is different. There's some people who feel overextended if they're in the market for more than 10 minutes. There are other people who would just never even think about being in the market for a mere 10 minutes. So you have to take what I do here and filter that through your own outlook. Decide whether it's valid or whether it's working or whether it's just a bunch of baloney. That's your job, not mine. But so far we see a lot of tendencies, and I don't think there's any real big surprises. Like I said, the only surprise this past week were these little excursions underneath this line. But once we identified this new channel, that seemed to make a little bit more sense what was going on. So let's see what this next week brings us. Our first day will be June 17th. Look, guys, if you got a dad who's still around, wish him a happy Father's Day tomorrow. If you are a father, happy Father's Day to you. And I want to thank you for your time and your support. Take care.